Hello everyone, and welcome to part 4 of Numbers 101. And I will now share my screen. We're going to talk about cash flow, which is the lifeblood of your business. So let's start on the slideshow from the beginning. So cash flow, the lifeblood of your business. What is cash flow, and what's the difference between cash flow and profit? Cash flow is the money in and out of your business, pure and simple. Profit, however, is what's left on paper after expenses. So, for example, if you have profit but no cash, that would be an unpaid invoice maybe. You've recorded the invoice in revenue, you haven't had it paid yet. So that would be an example of you have profit of the amount of the invoice, but there's no cash yet. An example of cash rich but no profit, then an upfront deposit is a good example of that. You haven't invoiced for the services yet, but someone has paid you in advance. So that is where you have cash but no profit. So cash is king. It's what pays the bills. So let's do an example. A wedding photographer books a $3,000 job and sends an invoice, but the couple pays 30 days later. The profit shows up in the accounts immediately, but there's no cash in the bank to pay this week's rent. Classic case of profit with no cash. On the flip side, a dog groomer receives $500 deposit upfront for a future monthly grooming package. There's plenty of cash now, but no profit yet because the work hasn't been done and the client hasn't been invoiced. So understanding operating cash flow. So it's cash from day-to-day operations, not anything to do with loans or investments. Cash in is payments from customers. Cash out could be rent, wages, subscriptions, and supplier payments. It's positive if you have more cash in than cash out, and that means you have a sustainable business. However, if it's negative, more cash going out than coming in, you're relying on savings and credit, which in the long run isn't sustainable. So another example, a small cafe earns $20,000 in sales this month, but after paying $8,000 in wages, $6,000 in rent, and $3,000 in supplier bills, they only have $3,000 left. That's their operating cash flow. It shows what's actually usable for the business, regardless of total revenue. So there are some tools to help you manage cash flow. Xero does have now cash flow modules within it. You may have to pay a little bit more your subscription. If you need more details of that, let me know. Google Sheets or Excel templates, you can set up a cash flow template using that. There's also more advanced apps you can use. Float or Fathom are two of those. And all of these include incoming cash, outgoing cash, and show you a running balance. So even simple forecasts reduce surprises and stress. You don't have to make it too complicated. A simple forecast using an Excel spreadsheet will work as long as you've got the figures right. So an example, a landscaping business uses a simple Excel spreadsheet to track cash in from customer payments and cash out for fuel, wages, and equipment. They can see that a tax bill is due in 6 weeks, and they plan ahead, avoiding stress and surprises. So I would imagine they will be putting some of the money that's coming in into a separate account so that it's there for that tax bill. So just a 10-minute update each week saves hours of worry. So simple ways to improve your cash flow position. You can invoice faster. Don't wait until the end of the month. Invoice immediately after the service, or better still, before the service happens. Follow up on overdue invoices. Make sure you are on top of those. Now your accounting software will help you with that, to send automatic reminders. Offer early payments and discounts. You could offer a discount if people pay sooner than the payment terms. You can cut unused subscriptions. I think lots of us will probably find there's at least one subscription we have that we're paying for that we don't need. And negotiate supplier terms. You may be paying your suppliers within 7 days, but maybe you could have 30 days, so you have more time to pay those bills, more cash in the bank. And set aside GST and tax in a separate account. Please do this. Don't wait until the GST, the BAS, is due to be paid and see you don't have the money, that you've spent it on something else. Put it aside weekly if you can, and it's there for when you have to pay that bill. You may only estimate the amount, but that's good enough. So a real world example. A graphic designer used to send invoices at the end of the month, waiting weeks to be paid. So by switching to invoicing immediately after each job and using automatic payment reminders, their cash flow improved dramatically. They also cut $99 from a monthly software subscription they hadn't used in 6 months. So dealing with lumpy or seasonal income, how do you do that? So know your income patterns. Are they stable, or do they go up and down? If you're a gardener, it could be that your income goes up and down, more work in the spring and summer, less work in the winter. And so know that's going to affect your income and your cash flow. So build a buffer during the good months. Put some of that money aside that you're earning in the spring and the summer for the winter months. Or even for when you go on holiday. If you're a sole operator and you go on holiday, you may not be getting any income during that time. So delay non-essential spending. Maybe don't buy that new laptop just yet. I know I want to buy a new laptop, but I'm having to wait. Pre-sell or book early with specials. You can advertise your services now for next month and book people in. Planning removes the panic. You will, I'm sure, understand that. So an example, a surf school makes 80% of its income from November to February, understandably. They now plan ahead by saving a percentage of each summer payment in a separate account to cover winter rent and wages. They also run discounted prepaid summer packages in spring to bring in early cash. Now, this is just an example of what a cash flow forecast looks like. The first is a bar chart, which visually shows you how the cash is accumulating. And the detail is just a spreadsheet, which shows you your inflows, outflows, net amount that came in, and the cumulative cash. Now, this looks very positive, so that is great. Cash is accumulating, which is perfect. So if you need any more help with this, as I said, there are apps to use. You can set up a Google spreadsheet. I prefer Excel spreadsheets. And there are Xero. You can use Xero to give you a cash flow forecast. So reach out if you need any help. And I hope this has helped all of you.